Hey everybody, this is Paul doing a slightly late video. It's about 6:30. The market is currently closed, obviously. Um, so I guess let's talk about the market and all the big moves that are going on. So the market is doing some pretty wild stuff right now, I'll tell you that. Um, so the two big ones are Nvidia and Supermicro. Just I mean, either these are like the most profitable companies in the history of history, or you know, I mean, you know, it's like you know, this is you know. So I guess my comment on this is, you know, be careful. I don't know what else to say about that, honestly. At this point, Nvidia being worth more than Amazon now, like, right? That's a thing. This is another one of those. It's a little bit less dramatic, but I mean, if you put it on the all-time chart, I mean, these things are doing stuff that Tesla did. You know, they're so far priced out, it's not even funny. So I guess so. Let's look at the data that came out. So the big data that came out would have been the uh, the the January CPI report. Came in kind of heavy. So as you can see, so the biggest contributor to the January CPI was obviously shelter. The weird thing about what's going on with the OER number, because you have to start digging into the OER number to even figure out what's going on. So as you can see, actual rent tracks OER, and OER is the survey of what people think they can charge. So as you can see, what people think they can charge is up here, and what people are actually charging is down here, right? Like something's busted. So the best guess is that right now the you know there's not enough people being surveyed, or maybe they're just surveying people in like low housing areas, low areas. But actual data is showing that actual data like rent is going down dramatically. So what happened? I mean, real estate got just slammed. You know, just completely slammed. So I think I'm not exactly sure what to do with OER anymore. We this is kind of where it's at right now. It should be way every other indicator that shows you what's going on tells you that it should be far, far, far lower. Um, so all that told you was basically that March was off the table. So that video that I did last week about maybe or 2 weeks ago about NYCB maybe causing the Fed to maybe pause something, something out there causing the Fed to pause. A few people were looking into this, so that's what this chart is right here. Is like how much of a bank's portfolio is CRE, or commercial bank real estate assets, and this comes from the Federal Reserve, and basically it shows how much of a bank, like what earnings, like what out of all the banks, what do they own, what's their exposure to commercial real estate, and this is honestly all over the place. So if you're NYCB, you own a bunch of stuff that's just worth garbage, and that makes up a lot of your portfolio. If you're other banks, you're not even remotely affected. Like so for example, like say Regions Financial, for example, in my area, they're not even affected. First Horizon is another one in my area, so as you can see, they're not even really too affected. Um, I don't think CRE is kind of the thing. There's just too many eyes on CRE for it to cause problems, unless somebody's just reporting something very like something's not getting reported correctly, or somebody's just flat out lying. Um, you know, so so I guess let's where are we at in the cycle? I guess is one of the bigger questions. Uh, Judging by what we're seeing in tech, we're definitely in a bull market for sure. Um, this was a great thing. I follow this person on Twitter. That's her name right there. And right now, so you can kind of read this right here. So the S&P is up 38.4 so for this bull market. And if you define the bull market as basically from where it bottomed, which would be in October of 2023, 2022, sorry. So where it bottomed at up till now, it's up 38%, which is impressive, but if you remember, the average bull market is up 114%. So this thing could have much further to go. And I think things like Nvidia, I think things like SMCI, without a doubt, are going to get washed out. Somebody's going to get left holding this thing at $1,000. Like this thing has Cisco 2000 or 1999 written all over it. And if you want to see what happened to Cisco, I'm not even sure. They might have had share splits both since then, but it might actually. So you can kind of get the general idea how these things play out. They play out in one very clear way, and then they take forever to even get close to their former glory. I think SMCI is screaming Cisco right now. Cisco used to go up. Actually, I don't know if many people remember when the internet first came out. They actually went up because they were the supplier for something in 3D effects. Everything was 2D at the time, and 3D was supposed to be the big thing that was going to be like drive their profits through the roof. And then the tech bubble crashed, and then reality hit. The profits didn't follow the price. So I think that's kind of what happens here. If SMCI basically comes out and says, hey, we might not make those kind of profits, you're going to see that thing fall off a cliff. And when I say it falls off a cliff, you're looking at 1999 there, December 1999. By December of 2000, it was already down that dramatic amount. If SMCI falls like that, you're going to take the whole market with you. So you might be looking at the portfolio, wondering what's going on, by the way. So slight update. I'm in the process of pretty much moving everything over to Fidelity. So if you go over to my Fidelity thing here. The only reason I'm not showing Fidelity is because Fidelity shows your entire account number, which is really stupid. Not just for guys making YouTube videos, but keyloggers, people that capture screens. I have no idea why Fidelity's showing entire account numbers. You can't hide it either, which is really stupid. At least E-Trade figured that out. Like when you hit show number, like there's a bunch of other numbers around here, so you can't even get close to guessing this unless you're, a genius. Um, so for right now, this is what the Fidelity account looks like. So I took profits on BST and BSTZ. I did get a screenshot of that before I did all this selling. So this is kind of what it looked like. So BST, BSTZ was at 484 shares. BST was at 307. This is kind of what we had. And then this is the setup now. So I got SPHD pretty much back to where it was. I did this today. I moved close to 60 grand around today. And I'm also rolling my IRA over the Fidelity too, but that doesn't matter. Like this tab is just called IRA, so you won't even notice the difference. Um, but that's kind of where we're at right now. But right now, so I think what I'm going to do is I'm going to hold off on adding to BST and BSTZ. They look pretty elevated. I'm gonna wait until SMCI. So if you look at BST for example, 10% of it is Nvidia alone. I don't see them having the fund manager having that kind of concentration into Nvidia. It's driving up the price, but it's also driving up the risk that goes along with it too. So I don't know if the fund manager is going to keep it at that, but I don't want that kind of Nvidia exposure. So I have no problem taking profits on BST, and then this is the perfect time to move my money, and then resettle in my new little home over there. And then I was above 70,000. I was above 70,000, I think on Monday, but Tuesday when I sold is when the CPI came out and dropped the market by a lot. So I was down like 400 that day or 500 that day. So, but I'll recover this no problem. Then also I'm going to get my tax return at the end of the month, which is going to put a sizable chunk into this. Pretty large chunk. I got a pretty decent tax return coming. So I think that's kind of where we're at right now. Like I say, like there's just certain things I won't touch in this market right now. Tech is one of them. Um, Anybody who has any kind of experience with the dot-com bubble can tell you right now that somebody's going to be left in tears on that. And when it falls, it keeps falling. So I don't know when the AI bubble pops, or how it pops, or when it pops, or if it will pop, but I don't want to be exposed to it. Um, the big one looks like OpenAI, and that's under Microsoft. So if everybody starts to realize that Microsoft is going to be the big winner, that could be the stock that's actually the one that really benefits from this. Especially if you can, I couldn't imagine Microsoft making these kind of moves that you see like Nvidia or something like that making. But it's entirely possible, given like some of the crazy stuff that OpenAI just literally published, that's actually going to disrupt Hollywood. Sam Altman on Twitter posted a whole thing of just this entire, like this video technology that they just came up with, where you just type in the description and it comes up with a 60-second video that looks real. It sounds like a copyright lawsuit waiting to happen, but that could be pretty interesting. So right now, what I'm gonna do is this is gonna get transferred over to the Fidelity here pretty soon. I'm gonna wind this account down. I'm just gonna keep one share of each in here, as you can see, just one share. And then I'm winding this down actually tonight, and this is actually going to get transferred over to Fidelity also here pretty soon. So E-Trade's not going to have really anything in it. I think my last count was 322 bucks, but I'll keep it just for to have a background on my videos and stuff like that, and you can kind of see what stocks I still own. If anything changes, I'll make like buy one share over in E-Trade or something. But so that's kind of where we're at right now. We're still waiting on data. I mean, with given where OER is at and how slow it's coming down, as you can see, it just makes up a massive chunk of current CPI. Um, it obviously took March off the table, which I don't even think was ever gonna happen unless payrolls, jobs just fell through the floor. I still think June is the real where it really is going to happen. The market's going to price in May, but the same exact thing is going to happen once some kind of data comes out, and especially with OER taking forever. Like once some kind of data comes out showing that OER is still taking forever, May is going to get priced out and June is going to get priced in. Um, so right now the market is actually tighter than the Fed, or less expectations than the Fed, which is kind of a worry because the real economy can't actually take these rates for much longer before you start seeing massive real estate layoffs, like construction and real estate layoffs. It's coming. Um, I imagine it's a pretty bad bloodbath, but you're going to start to see a lot of real estate jobs get just completely just decimated. So yeah, we'll see how it goes. Leave a comment, of course. If you have any questions, just let me know what you think. Like I said, the big hype right now this week is AI. I'm avoiding this. I mean, if you got in over here or whatever down here, then you're just a genius. If you somehow got in right here, held through this, which is already triple the price, and then if you somehow held through this, and that, and more power to you. If you walk away with 1,000% gain or some insanity like that, then you're trader of the year, or you're just bag holding until bag holding. Because when this thing starts to sell off, it's going to drop by 200, 300 in a day. If they don't make these earnings that match this price, which they're not. There's no chance they're making the earnings that match that price. Um, so let me know what you think. So y'all have a nice day. Thank you.